So Ernie, the survey results for May look pretty optimistic, are they?
Absolutely. The survey of supply managers in 9 states that we've been conducting since 1994 here at Creighton University, that survey, which produces a leading economic indicator, Cindy, that leading economic indicator went to its highest level in more than 4 years. The job picture is looking much better, although we've got a lot of territory to cover if you want to get back all those jobs that all the 9 states have lost. There have been a heck of a lot of job losses, and it's going to take a couple years to get back all those jobs that were lost. But we're still certainly well on their way. The May survey was very good. We'll see what the coming months have to offer, because there are real issues out there, particularly when you look at Europe, what's going on in Europe with the financial turmoil there and how that gets telegraphed back to this part of the country. This part of the country being the 9 states, what we call the Mid-America region, stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south. So all those states there doing quite well right now and likely to move positive in the months ahead. So I'm pretty optimistic about the regional economy in the months ahead.
So the European crisis is casting kind of a pall over the recovery for the Mid-America region.
Oh, absolutely, Cindy. What happens in this case is investors just don't want to hold those Greek bonds. They don't want to hold Spanish bonds. And what they're doing, of course, is selling those bonds, taking the euros, and then converting them to dollars, which drives up the value of the dollar. The reason they want the dollars is to buy the U.S. Treasuries. It's sort of, as we've talked about in prior months, this is an ugly contest. And the euro just happens to be uglier than the dollar right now. And that's driving up the value of the dollar. And that's it's putting downward pressure on farm income, agricultural income, manufacturing income. So even though the survey was very positive for the month of May, I think we're going to see a little bit slower growth in the months ahead, although I'm expecting good, positive growth. It's just not going to be as strong as what we anticipated what we would see without this European crisis, because again, it's pushing up the value of the dollar, pushing down the prices of all sorts of manufactured goods. Look at the price of oil, now down to below $70 a barrel. It was up to mid-80s. All this together is really undermining to some degree agricultural income and the industries that we survey. We survey those manufacturers, those businesses that serve the agricultural sector, and there I've got some concerns, but not enough of a concern to really push me to be more pessimistic about the economy. The economy is looking good. Right now, the tailwinds are much better than the headwinds.
Your survey talks about how the 9 states are adding jobs, and North Dakota looks like it never even lost jobs.
Absolutely. North Dakota stands out, and I don't have data on all the states across the U.S., but if you take North Dakota, I'd venture to say that and maybe a couple more states, the only states in the U.S. that did not lose jobs during the recession. North Dakota actually gained about 6,000 jobs. Now, that may not sound like a heck of a lot for many states like a Texas or a California. North Dakota, that was pretty good. What's happening in North Dakota is the energy sector. I mean, you've got a lot of oil exploration in North Dakota that's looking very good. And of course, unfortunately, what's going on in the Gulf right now is going to be good in some ways for oil exploration on land. And that's what we're going to see in North Dakota. We're going to see that in Wyoming. We're going to see that in Oklahoma, of course, and other states. Now, of course, only Oklahoma and the states that we survey, Oklahoma and North Dakota, are going to be significantly affected. But in another survey, we do another survey called the Mountain State Survey. Wyoming is in that survey. Wyoming is going to be positively affected as well. So that's what we're going to see going forward. But again, oil prices are coming down. But what we're going to see is the commitment by the U.S. government for alternative energy production. I mean, that's going to be a real strong push. Wind energy, of course, ethanol, corn-based ethanol, biodiesel. All these are going to be pushed by the federal government. Of course, that's good for this part of the country. which is number one in wind energy, number one in corn-based ethanol, and not too bad in solar energy. Certainly not number one in solar energy, though. So all those, we're going to see some growth there, and that's going to spill over into other sectors of the 9-state regional economy that we survey each month.
You still think the Fed is being a little bit timid on interest rates, don't you?
I certainly do, Cindy. I mean, we've got bubbles here, and our price index is up to above 80. Now, the index is 0 to 100. Anything above 50's growth neutral. So this is much too strong. Now, it's not showing up in inflation in the CPI, Consumer Price Index, PPI, Producer Price Index, but it is showing up in these bubbles. And we've had bubbles previously, and we know what happens when a bubble is, when we burst that bubble. And that, of course, was the tech bubble, which burst, the housing bubble, the stock market bubble. Now we've got bubbles in commodities, some of those. Gold, for example. Gold's reaching record prices per ounce. That's showing up in our survey. So while there's not in the CPI, not in the inflation gauges, but remember, that's a basket of goods. That's the average, what average consumers consume. Well, who's average? And in this case, we're going to see bubbles, and the real problem is that the Fed doesn't get ahead of this. Now, how do they get ahead of it? By raising rates at their June meeting. What's the likelihood of a rate increase at the June meeting? Almost zero. They're not going to raise rates, but they should be raising rates. They should begin. Right now, there's another issue about them not raising rates. Right now, banks can borrow at 0.5% at the discount window, and then they can lend to the U.S. government 3.1%. So why should they lend to small businesses out there? They shouldn't, at least for most of them, because of the risk. You can lend to the government, you're going to make a rate of return. The gap there is pretty good right now.
In your survey, you asked purchasing managers about cap and trade laws and whether or not they would have any impact. What was their reaction?
Not good. 72% of them expect cap and trade law, any cap and trade law that's going forward, to increase prices. So that's going to be additional price pressures as they see it. And of course, the remaining 28% didn't expect it to have much of an impact. So those that feel it'll have an impact, 72% say positive in terms of prices. So that's certainly not good on the inflation front either. Again, the Fed, when they begin raising rates, what happens when you have to raise them very quickly? And that's what's going to happen. That's not good. Let's do this in an orderly fashion. Of course, it's easy for me sitting here. I don't vote. I'm not a member of the Open Market Committee. If I were, I'd be raising rates.
How are the exports and imports doing?
Well, our exports looking good, Cindy. Trade numbers looking good. Of course, imports up. That's because our economy is expanding. Then we've got the exports up even while this turmoil in Europe is going on. That's slowing exports, of course, to Europe. But the other flip side, the exports to Asia, China, Japan even, South Korea, Vietnam, Indonesia, all these countries buying lots of our goods. That's very good, very positive, and I would not like to see that change. Of course, who would like to see it change? Well, there are some in the U.S. that like to have some barriers. So let's ease up. Let's don't have any barriers to trade in my estimation, my judgment.